Hello guys, this is your tutor ACCA Prasanth. In this video, I am going to talk about Byjus, India's most valued edtech startup. So very recently, I don't know if you have heard this news, but Byjus have been received an unmodified or a clean report, audit report from Deloitte, but after 17 months of delay. Now, in this video, I am not going to cover the aspects of whether Byjus is good or bad, what they are doing, etc. But however, from this news, how we can relate to the accounting concepts of ACCA as well as auditing concepts of ACCA. So this video is targeted to ACCA students who are either learning financial reporting or AA or AAA as well as SBRS, strategic business reporting. Anybody who are doing other financial courses, chartered accountancy courses, you can also watch this video, But one thing that I would like to tell you is that I will be focusing more on IFRS and ACCA related ESAs rather than the local accounting concepts or your chartered accountancy related concepts. So let us look at certain points from this particular news before we go into the main concepts. Byjus received an unqualified report. What is an unqualified report? We will cover that shortly. Byjus' last valuation was $22 billion. So the long delay actually alarmed the Ministry of Corporate Affairs in India, and they sent a letter to Byjus asking them for a clarity of why there was so much delay for issuing an audit report. And Byjus gave them a response stating that there were a lot of complexities in their accounting for the last year. Why? If you go through Byjus' life for the past 1 year, you can see that Byjus have acquired quite a number of companies over the past 1.5 years. So it is reported that they have at least acquired more than 10 companies. They have purchased more than 10 companies with a total value amounting to $2.5 billion. So why is this a complexity? We will learn that when we are going through the accounting concept. So far, Byjus have raised $6 billion of funding, and their aim is what? Their aim is to file for an IPO. Specifically, the news is being heard that they are going to file it in US through a special purpose acquisition company. With these specific points that we have heard, let us try to understand how we can relate it to our financial reporting subject and as well as SBR, strategic business reporting subject of ACCA. If you read the standards, financial reporting and SBR accounting standards, 10 acquisitions Byjus have made in the current year, totaling to around $2.5 billion. Where do we study this? We study in a standard called as IFRS 3, business combinations. Now, these transactions that have been made by Byjus could be either subsidiaries or associates. I don't have further information to that. But what will happen to Byjus? Byjus will now be considered as a group company, as a parent entity, with lot of investments and subsidiaries or associates, depending upon the number of shares that they have purchased. So definitely this leads to a complexity of business combinations. They need to consider their financial statements will not be just Byjus, but Byjus and other companies. So they will be considered as a group company. So they have to prepare their financial statements with consolidations. So consolidated statement of financial position and consolidated statement of profit or loss. Consolidated financial statements is what Byjus have to prepare rather than preparing a standalone financial statements. If it is standalone, then it will be just Byjus. But here Byjus and all the subsidiaries or associates or in fact investment that they have purchased. So IFRS 3 would have come to the picture and it would lead to a lot of complications where there will be intercompany transactions. Like Byjus would have given something to their subsidiaries and they would have given something to Byjus. There would have a lot of transactions that would have happened and all those transactions have to be eliminated. Intercompany transactions would have to be eliminated and only consolidated entries have to be posted and a lot of complications would have happened in that accounting. Now, whenever a company acquires a subsidiary or purchases an investment, IFRS 13 and as well as IFRS 9 comes into the picture. What is IFRS 13? Fair value investments. Investment, fair value of a product or anything is IFRS 13 talks about. In this particular transaction, we're going to talk about IFRS 13 fair value of investments. Now, all these companies Byjus would have acquired would not be publicly traded entities. What are publicly trading entities? If you search a company's name in Google, you will get to know what is their share price. That are publicly traded. Their shares are listed. Anybody can go and buy a share in the company and become an owner. They are public traded entities. And their value will be much easier to calculate. Why? Because you can go and find the share price. You can find out what is the number of shares acquired by Byjus and just take a multiplication. The valuation is done. The current valuation is done. But however, Byjus acquiring companies would be majorly in the ed tech business or would be majorly the education companies like Akash or like White Hat Juniors. They might not be public traded entities. So when they are not public traded entities, the question comes, what level of valuation they need to follow, whether they are level 1, level 2 and level 3. As you all know, level 1 is where you can get the valuation much easily. Like a public traded entity is level 1. Level 2 is which is not level 1 and where you need to have certain amount of complications to evaluate. Level 3 is total complexity will be so high that you need to find out the value of the company using internal calculations. You need to look at what is the profits that is earned by the subsidiary, what is the forecast. You need to find out the valuation techniques that you have learned in your financial management and equity based valuation and cost of capital. A lot of things you need to think about it, discounted cash flow method, etc. So all of these would have been used to find out the valuation of the subsidiaries, and definitely these are not easy to do. You need to spend a lot of time to find out the accounting value for these companies. Of course, Byjus purchased these companies by spending $2.5 billion, but doesn't mean that their value is the same. It could be more as well as down. If it is more or down, they need to change the value at the year end. This is where IFRS 9 comes into the picture. Fair value measurements. If Byjus have acquired all these 10 subsidiaries through equity method, like they have purchased the equity of the organization, then they can value it using OCI or fair value to P&L. So whatever the changes or fair value would have happened, they have to take it into OCI or P&L. Or if they are going to consolidate, then that's a totally different ballgame. So they need to find out, or Byjus would have spent time and Deloitte would have spent time to find out what will be the valuation methods they're going to use, whether it will be OCI, fair P&L and IFRS 9 questions and answers. All the implications would have come into the picture. So you need to be very careful when valuation of these investments. Just because you have understood the value, what will be the fair value change, where it will go to, whether you're going to take it to OCI, whether you're going to take it to P&L, how you're going to do it. All those things, their business model and the cash flow model should also have to be questioned. So with this simple statement of Byjus acquiring 10 acquisitions with total of 2.5 billion, how many standards we have learned? We have learned about IFRS 3 business combinations, IFRS 13 fair value of investments and IFRS 9 financial instruments. Now let us try to apply these concepts in auditing as well. Firstly, what is unqualified report? Or Deloitte have issued an unqualified report to Byjus. What is unqualified report? Unqualified report are a report where you are saying that the financial statements of Byjus are free from material misstatements, which means there are no material errors which the Deloitte could identify. Now, Byjus acquiring all these companies would make them a group company, and now this will become a group audit, which means there will be a group auditor, Deloitte, and they will have subsidiaries should also be audited, maybe with a component auditor or maybe another auditor, and their report and all those things have to be considered. So that makes the audit complex because it's a group audit. And definitely Byjus have acquired it only in the current year. So initial year risk will also come into place. So if you think about the audit risk, what are the risks that is associated to here? Valuation risk is definitely one of the most important risks that I would consider, because all these 10 companies, how are you going to account it? Have you followed the correct standard? Have you used the correct methodology to fair value the instruments? Whether the valuation that is done by the company is right or wrong, whether there are issues there, all those things have to be considered, making it a complex audit every single time. IFRS 9 have been followed diligently or not, whether the fair value changes have been accounted by the company or not, will become another audit risk. And as well, Byjus is an edtech company with a most valued company and it has a very big global presence, making it a public interest entity. So that itself is a bigger risk. And the inherent nature, and if you look at the operations of the company, if you look at the operations, Byjus, they have a mobile application, they will have a lot of IPOs, they will have a lot of software assets. So all of these things, and they also have now physical assets. They have started into tuition model where they have opened, tuition centers. So they will have physical assets. They will have a lot of things, and making it more and more complex and higher amount of risk would have been in place. Controls, since the company is starting to do a lot of things, they would have still been in the early stages of implementing quite a lot of controls. So that will also make it a controlled risk. Detection risk, auditors failing and not identifying errors in the valuations could be a problem, because valuation is a bigger risk now, because they have acquired material amount of transaction. With total 22 billion, they have acquired 2.5 billion of acquisitions, which is approximately 10%, making it very, very material. And the most important factor for audit risk is that they have an interest to go on to IPO. So which means there is a risk of fraud risk as well as manipulation. I'm not saying that Byjus would have conducted a fraud. I don't know all that. But what I'm saying is, from an audit risk angle, auditors would have thought about the fraud risk or a risk of manipulation of their financial statements, because they have an interest to go to IPO, and to pass those IPOs initial results and initial things, they would have definitely made their financials stronger, because only if their financials are stronger, the board members would accept it and the shareholders would show good in the company. So there is a risk of manipulation or fraud because they have an interest to make the changes. Definitely consolidation, with bigger risk as well in the company. Why? Because all these consolidating transactions, intercompany eliminations, adjustments would also be a bigger risk for this entity. Revenue, the subsidiary's revenue is added properly, will also be a bigger risk. And most of the cases, it's an education company, so education tends to happen for more than 6 months or 1 year. So revenue recognition will also be a problem according to IFRS 15. There could be a chances that students have paid advance total amount as an advance, and revenue has not been given. The performance obligation have not been satisfied, and hence there will be a concept of deferred income, and auditors would have to consider that as well. So because of these angles, like with just so many small points that we have got right now, we have laid down what are the accounting complexities and as well as what are the auditing complexities from these informations. If you enjoyed watching this video, do like, share and subscribe, and do follow my Instagram channel. If you want more such informations relating to the practical scenario, do message me or comment, and happy to make such videos. Byjus is gonna go big, and giving an unqualified report by Deloitte is a big positive change for them, and it gives a lot of confidence in the board members. But keep studying what you are studying, financial reporting and auditing. Thank you guys. All the best.